traders and investors, and welcome back to the Trading Analysis YouTube channel. I'm Bennett Tyndall. It's Thursday afternoon, March 24th, 2022, and I wanted to take this opportunity to follow up to a recent video put out by our research director, Terry Long, in regards to precious metals. Specifically, we're going to take a look at the price action in gold and look at the Elliott wave count and the two distinct possibilities moving forward. If you've been tracking our work or following us on our Wednesday live stream show, you'll know that we've been tracking a sideways period of consolidation going back to August 3rd of 2020 when we had the 2089 spot 20 high for gold prior to entering a sideways consolidation effort at or around the 50-day moving average. We have been tracking this as an Elliott wave triangle with now a post-triangle mode of development, which will likely be met with continuation short of any de-escalation to the situation overseas. Let's take a look at the Elliott wave count and the Elliott wave perspective now. So here we can see going back to the August high, and I do apologize for not having a camera. I've been dealing with some allergies here in the great state of Texas, and I felt it would be best to just present the charts today. But taking a look at the development in gold futures, zooming out, we can see the move in the development going all the way back to December of 2015. And it's December of 2015 that we can count the first mode of development, which is met with a confirming three-wave retracement, finding support between the 61 and 78% retracement of that five-wave rally. From there, we have a leading diagonal of the contracting variety, a very sharp wave 2 retracement, which is typical following a leading diagonal. And from there, you can count 5 smaller waves in blue 3. Interestingly enough, if you were to have sourced a base channel from the December 2015 low drawn through the August 2018 low and then projected your parallel trend line over the top of the July 2016 high, you would have had an established base trend channel, which was of significance. It offered resistance for gold in September of 2019. We proceed to consolidate. We pair up our corrections of the same degree, meaning this wave 4 did demonstrate equality to its wave 2 counterpart. And then we see wave 5 take us higher to complete blue wave 3. Blue wave 3 did meet the 1618 projection of 1. And then we proceed to enter blue wave 4. Blue wave 4 also met equality to its wave 2 counterpart, and it was about a 38% retracement of the wave 3 breakout. So we can see the base channel significance in August of 2019 offering resistance. We then have another instance of resistance, there you go, into January of 2020. We get finally above it, back test the previous fourth wave here in blue intermediate degree wave 4, and then we move up higher to complete our cycle, primary degree wave 3. Primary degree wave 3 did meet its 1618 relationship or projection of wave 1, and it actually met a 200% 3v1 projection. We didn't quite get to the 2618, but completing into the 200% is not out of the realm of typical possibilities or typical projections for a wave 3. Typically, our 1618 is the most significant and most common, as you can see by our color-coordinated fib in the Trading Analysis edition of Motive Wave, which, by the way, is currently on sale, 25% off if you are interested in that. So going back to the base channel, and after completing the July 2020 high or August 2020 high, you can see the pullback and consolidation that began took us to a back test of that particular trend channel. So we have it going from an area of resistance to now an area of support. This has been a sideways consolidation that we best count as a wave 4 triangle, and we've now given way to 5 waves out of the triangle, failing to break through the August 2020 high. Now, zooming in from the weekly, we're going to go ahead and focus in on orange 3 down into orange wave 4. Down to the daily time frame, we can see triangle completion, and we can source triangle completion either December 15th. We can also source triangle completion January 31st. Sourcing it in December of last year, taking you from the 1 day down to the 195-minute time frame, sourcing it from there, we have a move up in 1, a sideways flat in wave 2, 5 smaller waves in 3 to the 2618. Wave 4 meets its 38% retracement support, and then we have a move up in 5. Now, our wave 5 target of 2048 was exceeded The actual high in wave 5 was 2072. An overshoot given the situations and circumstances that led to this rally. It's not all that surprising. And now we can count a 5-wave decline into the March 16th low, where we met support near the near 1900. So from the 195-minute chart back to the 1-day time frame, we now have a directional move off of the high. That directional move we expect to be wave A of a wave 2 pullback, and this is where gold is really going to confirm the post-triangle breakout. If this is truly a mode of development, then we do anticipate this correction meeting support between its 50 and 61% retracement. We could move as low as the 786 retracement. And another key technical area would be the extended trend line offered from the contracting triangle. If you take a June 1st 21 high through the November 16th 21 high, that is often a development that we see post-triangle thrust, where the first wave 1 completes and your 3-wave retracement in wave 2 finds support into that trend line. So for now, we have 5 waves off of the high, and we are tracing out a counter trend correction in our opinion. We do expect resistance on this move back to the upside in gold to be met between 1984 and 2005. Again, it can go as high as the 786, but these would be the most common fib targets. And then we'll be looking for wave C. Depending on the magnitude and duration of the B wave, and also depending on what the pattern is inside of B, that will dictate the depth and duration of the C wave. As an example, if the B wave is actually an overall triangle development, then a triangle development in B will typically give way to a 61% relationship in wave C compared to A. Now, what if we see this bid in gold and precious metals fade? We see a de-escalation to the situation overseas between Russia and Ukraine. Is there a wave count that would allow for this move to the upside to be a corrective rally? And the answer is absolutely. Absolutely. We first have to take a step back to the weekly time frame once again and discuss a possible alternate subdivision to the price action between July of 2016 and August of 2018. In our preferred view, or I should say in the bullish view, which suggests this is post-triangle thrust and we are working a 3-wave retracement, backing out to the weekly time frame, I have wave 2 completing December. This is a smaller wave 1 and a smaller wave 2, smaller degree wave 2. That allows for a nice clean 5-wave subdivision in 3, nice pairing of 4 and 2, and that takes us into wave 5, into fairly standard fib targets. Now, taking you over to the alternate view would suggest that orange wave 2 actually did not complete until August of 2018. That means we have a 3-wave sideways progression, and this is the move up in 3. The issues I have with this particular interpretation really boils down to how wave 3 subdivides. And in this instance, you don't get a really clean 5-wave rally in either 5 of 3 or 3 of 3, but it's not wrong. It's not wrong. And the reason this is important is if in fact wave 2 actually was between 2016 and 2018, and this move up here was not a new motive wave, then that changes the time relationship between our wave 4 and our wave 2 corrections. In this instance, if wave 2 did finish 2018 and wave 3 is into the August of 2020 highs, then chances are, due to the guideline of equality, which suggests corrections of the same degree will tend towards equality in either duration or magnitude, the guideline of equality would suggest that time equality does not come in until September of this year, September 16th of this year to be specific. This would suggest that we've been in a corrective rally in the form of a wave 4 flat. If this is the case, we have 3 waves down, a move up in A, the triangle in this instance is in B of B, and the 5-wave rally to the upside to just shy of the 2020 highs was in fact C of B, and now we will be looking for a 5-wave decline. Do I think this is the case? Well, again, it's going to depend on what happens with the situation abroad. So both opportunities or both possible counts are valid. At this point, it's going to come down to how price action responds following this corrective move. If we see the 3-wave retracement yield a 5-wave decline into wave 2 fib support that is also met with positive momentum divergence, then chances are, if that is then also met with 5 waves back to the upside, we are post-triangle thrust, and the bid in precious metals, specifically gold, will continue. If the 5-wave decline off of the high that we've seen so far gives way to 3 waves back, and then we start pushing into support with new extremes in momentum compared to the A wave low or the March 17th low, then that would suggest that potentially all of this was a corrective rally. I'm open to both interpretations. I think there are opportunities within certain gold miners and gold ETFs that should follow suit, and we'll continue to track this development and bring you up to speed. You can join us every Wednesday right here on the Trading Analysis YouTube channel, and you can also check out Crypto Lab with Alex. He heads up our macro analysis. He comes from an institutional background. He also takes the time to review the bond market, gold, crude oil, etc. on his Thursday stream. So thanks again for tuning in. Hope you guys are enjoying the videos, and we will see you on the next market update. Take care.